and it fizzled out. Some interesting things going on in the weekly time frame. We ended up giving back all of the rally for the S&P, but let's start with the Dow. The Dow, again, at 8 of a 9 count this week in the weekly time frame. The Dow is up 238 points, up 0.5%. The S&P had a rally. It fizzled out. We ended up closing up less than 0.5 point. We closed flat. More about that later. NASDAQ gave back the rally and ended up negative, down 0.28%. The Russell was up 0.72%, and the VIX was up 0.12%, still holding above the 50-period moving average. That's problematic for a bullish case going forward. We continue to get closes above that 50-period moving average on the VIX. We've got day 3 of the government shutdown. The Trump administration is already starting to freeze spending programs. And what I'm watching for is to see if Trump goes through with this threat on really taking a wrecking ball to the size of the federal government. He's talking about slashing the size of government. He might have waited, the Trump administration might have waited until the markets closed on Friday to announce it. We might get it later today. Maybe by the time you watch this video, we've already got it. Maybe over the weekend. Now they had a vote. The Senate took another vote, and it did the CR continuing resolution did not pass yet again. So the government shut down at least until Monday. That's what we know for sure. But Trump warned that with the government shutdown, he might dramatically shrink the federal government. And if he does, how does the stock market react to that? How does the Bitcoin and the crypto market react to that? We start hearing of massive layoffs, and these could be permanent layoffs. Congress shut down. We have a government shutdown, so they have relinquished their authority to the executive branch. So Trump can come in and just start taking a wrecking ball to the federal government and doing what I call Doge 2.0, just really downsizing the government. And he has the discretion to permanently eliminate agencies, permanently eliminate programs. Does he go through with that threat and go forward with it? He's already starting to eliminate, I should say freezing infrastructure projects in Chicago. He's starting to freeze money going towards green programs. So he's starting to do it. But if he announces mass layoffs, elimination of agencies, or elimination of programs, then again, we'll be watching to see how does Wall Street respond to that. I don't know that that's going to be the catalyst, but a catalyst for a sell-off, but it could be. The stock market, when we had the 2018 government shutdown, the stock market in a severe downtrend. And then at the end of the 35-day shutdown, it ended up rebounding. A little bit of volatility at the very beginning. Bitcoin, it was the other way. Bitcoin rallied in 2018 with the Fed pause in December, and then Bitcoin rallied big time for 3 days. And then it collapsed by 20%, and it ended up, after the government shutdown, falling a little bit more. It ended up dropping 21.60%. You can see my latest Bitcoin video, and I'll show you the charts on this on Bitcoin. And if you want to see that, I'll link it at the end of this video. I just made the video today. Bitcoin peaked the 3rd day of the government shutdown, and then it collapsed. We see something like that with the stock market peaking the 3rd day of the government shutdown. Bitcoin peaking the 3rd day. Bitcoin had a big rally back up to test the highs. It's still making a lower high. But my signals all turned back to bullish on Bitcoin. It's in this trading range now. So you might want to go check that out. But if we do see the peak in the market, the peak with Bitcoin, the 3rd day of the government shutdown, as Bitcoin did back in 2018, do they both start falling together? Do we see that be part of the catalyst? The government shutdown, concern about consumer spending, concern about the fragile labor market, concerned about GDP, concerned about if Trump does start taking a wrecking ball to the federal government and downsizing it and shrinking it dramatically, which again, may be concerns that if there are massive layoffs, how that might impact consumer spending and GDP and the labor market going forward. So just some things to be paying attention to as the two political parties battle it out, go toe to toe. And the other thing is if Trump starts doing this, do the Democrats eventually cave? Now they're wanting to keep the government open another 6 or 7 weeks here. They want 1.5 trillion in spending to undo some of the stuff the Republicans did with the big beautiful bill earlier in the year. There's no way the Republicans are going to give in to that. There's no way. But if Trump starts taking a wrecking ball to some of the agencies and some of the programs that the Democrats like, do the Democrats cave and come back and reopen the government to stop it? We'll be watching to see how long does this government shutdown go for, and when does it end? Does it go? The last one, 2018, it went 35 days. Do the Democrats choose not to support the clean continuing resolution? They voted on it again today, and the Republicans voted for it. A couple of Democrats, I think it was 3, voted for it, and the rest of the Democrats in the Senate voted against it. So again, you've got the two political parties going toe to toe here. Or does this drag out and the market begins to be concerned about it affecting the economy with consumer spending and the GDP? A couple different ways it can play as the two political parties fight it out, but we'll be watching all of this unfolds. If you want to see something amazing, go watch my Bitcoin video, because we could see the stock market and Bitcoin repeat exactly what Bitcoin did back in 2018. Initially, you get a rally at the beginning with the government shutdown, and then you begin to see markets collapse. So take the time and go watch that video. I'll link it at the end of this one. I just made it right before I made this video. And then lastly, again, the Trump administration might have waited until Friday. They have, we've had the third day here now. They've started to announce a few things of freezing funds for certain programs. Do we get a bigger announcement about, mass layoffs, the closing of government agencies, certain federal programs ending? Get that here later today on Friday as I'm making the video shortly after the market is closed here. Get it later on into the weekend or possibly early next week. It's likely coming. Yesterday, there was an announcement out of the White House from the press secretary that said it was coming within 2 days. So again, they're likely waiting until the stock market closes in order to announce this, not to rattle markets. So we'll be watching Bitcoin. What happens if it is announced? We'll be watching because Bitcoin trades around the clock, and then we'll be watching to see, do we get a really ugly Monday if the market does end up having a very negative response to all of this with the negative divergences that have now formed on the S&P 500 and the NASDAQ. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. I don't have any sponsors. I turn those offers down. Just a direct relationship with you. You could take a moment to help out. I would really, really appreciate it. Thank you for your consideration for that. Just real quick on the VIX, I just want to point out we're still above the 50-period moving average. You've still got these tight bands here saying something's about to happen. We've had the volatility a little bit over the summer, but it didn't produce any significant decline. And you've got the tightening of the bands. You've got the MACD pushing into positive territory now. This is what we had before the last time we had that. We had the February peak, and the big sell-off in February began a 21% sell-off with the S&P, which you can see over here. That's the last time we had that signal triggered. We have it triggered right now. We're still in positive territory. The MACD is still bullish, and the VIX is still above 50, warning, hey, volatility is likely going to sharply increase. The bands have tightened up just like they tightened up back over here, telling us something was going to happen, and it did. We saw volatility explode, and we ended up dropping, 21% on the S&P, and we ended up dropping nearly 26% on the NASDAQ. Nvidia dropped over 40%, and we've had the breakout of the bullish wedge here. We'll be watching, does volatility start increasing? Be aware that Nvidia has slammed into major resistance, got the black candlestick. yesterday and slammed into major resistance in the weekly time frame, and we have now a down day. We didn't close at the lows of the session, but we did turn down on Nvidia, down by 0.2, down by 0.67%. We were down over 1% at the lows of the session for Nvidia. You got that black candlestick. You're turning down off of the upper Bollinger Band and turning at major resistance. So just be aware of that. The stochastic rolled over today. And you look at Nvidia's long-term chart. Again, everyone's going, oh, Nvidia just broke out. And it's slamming right into this upper channel, this long-term channel from the lows back over here. We slightly breached it right there. I've drawn a parallel boundary from the high over here. This is all the data in Nvidia's history. And if you draw a parallel line, we slammed up into it in June. We're slamming up into it right now. We were just right under it there at the low, our previous high, I should say, our previous high right there that we slammed into it. And again, you can see the trend line is clear as I can. Again, I think we're going to end up selling off around this trend line and then going back up and hitting this level. And if we do that, and I drew that too big going on into 2026, but if we do that, we could either top late 2025 or early 2026 at the $200 area. We can go up above $200 if we turn down here off of this area right now and get a correction. A black candlestick as we're slamming up into this trend line in the daily time frame yesterday, and this trend line is very, very close to the broadening formation trend line. If we exclude the shadow, right here, we hit it in June, but then we didn't quite reach it here at these other peaks over here, and then we're slamming into it now. If you look at the trend line, if we exclude the shadow from June, you have a really nice looking, let me show it to you up close. Let me show you this first. Right here, we have with our log scaling, we have this broadening formation. We didn't quite reach it right here. If we just, touch that, if we follow the trend line here, and again, we slammed into it here, and now we're slamming into it again. Well, if you exclude the shadow, you got a really nice looking upper boundary. Let me show you that. This is our log scaling here, including the shadow from the first peak there in June of 2024. But if we bring up our linear scaling in the weekly time frame, you got a really nice looking trend line here. If we exclude the shadow, look at this. You exclude the shadow in June, you come up and you hit it here in late 2024, you slam into it, you sell off, you come up, you hit it again here at the August 2025 peak, and now we're slamming up into it again. So if we do end up selling off, I think it could sell off, move towards the 50-week, move towards the 200, and then still go up and hit this level and still likely reach $200, probably overthrow $200 into the fourth quarter or early on into the first quarter of 2026. But this trend line is pretty fascinating. I posted this chart on X, formerly Twitter, at Charting Prodigy today, and I found this fascinating. Each time we've hit this trend line, we've had a pretty big sell-off here, 36%. I told you the same thing happened with the NASDAQ, 36%. I think NASDAQ sold off about 16% or so around that time. Here, we sold off 44% on Nvidia, and then you got the lower boundary, the broadening formation. With that sell-off, you come back up, you hit the trend line again and again here, and we turned off of the August high. You dropped 11.25%, and now, question mark, or what are we going to do here? But look at this trend line. Every time we've hit it, you've had a pretty significant sell-off. We're hitting it this week with our high, with yesterday's high, and the black candlestick that got above that Bollinger Band in the daily time frame. It got rejection added. Pretty fascinating trend line here on the on Nvidia weekly chart. Could this be associated with some kind of sell-off surrounding the government shutdown, surrounding Trump, or maybe it's something else, some other catalyst, concerns about the economy with the shutdown, if it becomes extended or what. We'll see how long it lasts. The last one was 35 days. See how long this one lasts. Keep your eye on this trend line on Nvidia. I found it very fascinating. Our log scaling, and again, we never quite reached that other trend line right over here, right there. We exclude the shadow in the weekly time frame. With our linear, we're slamming up into the trend line with each touch. It's pretty interesting. But here we've got another potential reference point for a divergence. If we're turning off of the trend line in the weekly time frame, we're turning off of that upper Bollinger Band. So again, going to be watching to see what happens at this level of resistance. Every time we've touched the trend line, there's been a significant sell-off. The NASDAQ, the same thing. We've got this long-term trend line on the NASDAQ from the 2020 low, the pandemic low over here. And we came up to it, we bounced off of it, we broke it. Now we've come up to it in July of 2024 and late 2024. And then we had significant sell-offs with both of those, just as we saw with Nvidia. Nvidia sold off, NASDAQ sold off. And we dropped 16% in the summer of 2024, and then we hit it again in 2020, late 2024. We went up, made a higher high, and formed a divergence, and then we dropped nearly 26%. And again, these are just rounding numbers, forming the same type of broadening formation on the NASDAQ as you are with Nvidia, and we have this upper boundary here. With our linear scaling, we're just slightly overthrowing it. We're slamming right into it with our log scaling, a little bit better of a broadening formation with the log scaling. But every time we hit this trend line, bad stuff starts happening. It's likely going to happen again here. This is the weekly chart of the NASDAQ. Let's look at the broadening formation up close. Now it's really a nice looking trend line with the log scaling. Really nice looking pattern here, but we slammed right up into it. We hit it and we stalled at it. And here it is in the weekly time frame. With that, we rolled over with the stochastic and we now have a divergence with our summer peak. We have a divergence on the stochastic. Just move it up here so you can see it. We've got this divergence. And we're getting the bearish touch now this week here, a bearish divergence with our previous peak on the NASDAQ slamming into this trend line. So again, it's likely you're going to get a reaction off of the trend line here at the broadening formation with NASDAQ and with Nvidia. And with our previous high there, we were just shy of that broadening formation upper boundary. I mean, we were just a whisker away from it, turned down, and then that was a late September peak there that we saw that, and then we went back up, and now we've slammed right up into it here in the daily time frame with our broadening formation, completing what looks to be completing the divergence. The RSI peaked out, and then it turned down, and so now you have a divergence. And the rally that we had today fizzled out. We had a positive rally on the S&P and NASDAQ, and it fizzled out, and we ended up closing down 0.47%, down 107 points on the NASDAQ. So again, I think you're going to end up dropping down below the 50 period, dropping back towards the 200. Maybe you reach it, maybe you don't. If we get something like what we had over here, you're gonna move back to beyond the 200 period. If you get a 16% sell-off like what we had over here, that would take us beyond our 200 period moving average. So again, I'll be looking at the Fibonacci retracements. I'll be looking at all of this, but again, you're likely going to see rejection here. And is something going to happen? Is that going to be regarding the shutdown? Is it going to be maybe Trump rattles the markets with what, taking a wrecking ball to the federal government? I have no idea what the catalyst may be, but I'm just telling you, we're hitting the resistance, and I'm telling you, the S&P didn't have too much volatility with the shutdown the last time around. It really bottomed at the beginning of the shutdown and went higher. It was in a downtrend. Here, we're in an uptrend on the S&P and the NASDAQ as the government shutdown starts. So you're in a different trend. And so this one, CNBC said earlier in the week, this shutdown could be different. And again, sometimes markets get rattled by these things. Other times they don't. It could be that we see something similar to what happened to Bitcoin the last time around. Got the markets in an uptrend as the government shutdown starts. And if it is extended, could it rattle markets? We'll see what happens. Does the government eventually reopen and we start getting the economic data and that rattles the markets? And again, the next jobs report that we get, if it's stronger, well, then why does the Fed need to cut? If it's weak, like we saw with the ADP private payrolls going negative, well, then Could be concerns about recession, but the divergence looks to be done here on the RSI, slamming up into the upper boundary of our broadening formation. Now going back to the weekly chart, as we're slamming up into this trend line here from the 2020 low and the upper boundary of our broadening formation with our log scaling, as we're overthrowing the trend line ever so slightly here and slamming into the upper boundary of the trend line with the log scaling, you are getting a 9-count sell signal at major resistance. This is not just a 9-count, it is a 9-9, which is a reversal pattern, like a 13-9 is a reversal over here. Here we went a little bit higher and turned off of that trend line, dropped 16%. You hit it over here, you dropped 26%. What's going to happen right here? But here in the weekly time frame, you're getting a 9-9 signal. It was a 9 that marked the bottom over here. It was the 8 bar that was the low of the count there at the April low. Over here we completed a 13, a little bit higher than the previous peak, formed a divergence in the daily time frame, and you had the sell-off. So be aware of this 9-9 pattern as we're slamming into the upper boundary of the broadening formation and hitting the long-term trend line on the NASDAQ 100 from the 2020 low. And as we're slamming up into the trend line, we are getting another candle of indecision. We got one last week in the form of a spinning top. You get another spinning top this week, back-to-back reversal candlesticks, potential reversal candlesticks, if they get confirmed. So another candle of indecision here. Again, we continue to hit that upper boundary of the broadening formation. We hit it in the weekly. We hit it in the weekly time frame. We're hitting it again. Completed diversions on the NASDAQ. If we now start dropping below the 10 and 20 period moving average and the momentum cloud here, if we start seeing validation and signals turning bearish, my signals remain bullish. Like with Nvidia, we got a bearish stochastic cross here today. Friday session, we had that black candlestick, possible hanging man candlestick, again, not confirmed. Tried to break below it at the lows, and we just closed there right near the lows of the hanging man candlestick. Black candlesticks often can mark peaks, so again, something worth watching here on the NASDAQ 100 daily chart up close and personal. They get the MACD rolling over, but now you have a divergence on the MACD and the histogram with price. Look at this. Again, in the most recent price action, the MACD did not move to a new high. You got a divergence right there, and you got it on the histogram. If the histogram goes negative, the MACD will roll over, and you'll likely drop below the 10 and 20 period moving average. Start moving towards the 50, start moving towards the 200, not seen on this chart at lower levels. It's really formed this massive rising wedge pattern here in that broadening formation on the NASDAQ. If we connect these recent highs here, you got a large rising wedge here. Again, I expect that we're either going down towards the previous highs here at the February peak or towards the 200 or maybe under it. Like I said, if we get just what we had with the first drawdown with the broadening formation, if we drop 16%, you're going under the 200 period moving average, and then we'll be looking at the Fibonacci retracements as well. The S&P 500, it gapped higher. It rallied, and then formed negative diversions on the 5-minute chart, and we ended up closing flat, giving back the entire rally, coming down to the 200 period, trying to bounce off of it, and then closing just under the 200 period. If we sell off come Monday, we got to hold below that 200 period moving average. A rebound back up, you got to get back above the 50 in the cloud here in the 5-minute time frame to attempt a recovery. That broke a second rising wedge that formed with this this rally up here since late September. We peaked on the 23rd over here. We broke down from this rising wedge. We went back up and we formed another rising wedge that broke down during this session. We broke down and we back tested after gapping higher, forming a negative divergence here on the 15-minute chart on the MACD. Here in the most recent price action on the RSI, with our gap higher, it formed a divergence, and then we broke down and we broke that trend line. So again, if we start taking out the cloud, you come down here and hold below the 50. We close just under the 50, just under the 50 here, just under the 200 in the 5-minute time frame. Then you can start moving back towards the 200. You can start turning off of some of these resistance levels that we're seeing in the weekly time frame. Here you can see the back-to-back rising wedges, rising wedge here, and then we got another one as we broke down. We are still holding above the 50 here in the 60-minute time frame. The cloud, with this breakdown that we had, as we saw in the 15-minute chart, and you could slightly see it here in the 60-minute time frame, MACD rolled over. Do we end up now coming back and try to take out that 50? And if you do, this low right here, this is where our 200 period moving average is coming in at in the 60-minute time frame. Stochastic formed a divergence with the prior high, and it turned down during the session. With that gap higher and the sell-off to close flat, we ended up getting this little let me just bring it up closer. It's a little spinning top looking kind of a candlestick, maybe a sloppy shooting star, but it looks like a spinning top or kind of a doji pattern here, closing near the low like a gravestone doji. But you can see again, for a shooting star, usually you don't want any kind of shadow on the bottom. So again, it looks more like kind of a gravestone doji or maybe a spinning top. It does look like a gravestone doji, another black candlestick. We had a hanging man yesterday, hanging man, a low hanging man candlestick, not confirmed today. Now you get a possible, what looks like a gravestone doji, where you get the cross at the lower end of the candle. Up, tagged the upper Bollinger Band, came to just under it, and turned off of it, and we had selling pressure. Again, like the NASDAQ, we completed this divergence on the S&P, or on the S&P 500 here, completed it, and we began to turn down slightly there on the RSI. I'll zoom out and show you. Again, we had the MACD roll over. It turned back up. MACD never did roll over on NASDAQ, but they're both forming a divergence in this most recent price action. And again, I'll be watching to see if we roll over on the MACD early next week, Monday or Tuesday. I think it's very, very possible that happens. And we have, if we just zoom out here, this massive divergence on the MACD. And we really haven't had any kind of significant pullback. We've been finding support at the 20-period moving average. We've been finding support above the 50-period moving average. And if we get rejection, and I told you to be watching the trend line right here, we went up and slammed right into it. And we got that little topping tail in what looks like a gravestone doji. It's just got a small, tiny, real body, like a spinning top, maybe a cousin to the gravestone doji. And again, black candlestick at that, meaning we gapped higher, but we closed lower. We're still above the previous day's close, just barely, but gave us a black candlestick. Again, they're often associated with reversals, but you're slamming into this level. You've got this divergence. You've got a divergence in the most recent price action on the MACD, and then you've got this divergence on the RSI, multiple point divergence here going all the way back. This whole thing, again, is likely going to give you a Fibonacci retracement, giving us a bigger sell-off than what we've seen so far, and probably a move back towards the 200-period moving average or horizontal support. Something bigger would be under the 200-period moving average. But again, just like the NASDAQ, we have this massive rising wedge with this divergence. And if we do break down, the previous peak is at 6150, the 200-period around the 6,000 area. Of that, the 100-period and the cloud right here, just some different levels to be paying attention to. If E does what it did in the summer of 2024, then it would be a 10% drop. If we got a 10% drop, you're looking at going back to the 6,000 area towards the 200-period moving average. NASDAQ does what it did it previously in July of 2024. It would be moving beyond the 200-period. It would be moving down 16%. And those are just, if we just do what we just did during the summer sell-off in 2024, that first leg down in the broadening formation with Nvidia and with NASDAQ 100. The S&P weekly chart, again coming up and hitting the trend line from the 2018 high, the first high there. Again, this is a parallel boundary from the low here at the 2020 low and our 2022 low, and that is a parallel boundary connecting that with the 2022 high with the S&P 500, and then slamming up into it, just slightly overthrowing it, moving towards the red trend line actually, but closing right at that blue trend line for the week, it looks like anyways. We have, as we're going up and hitting this level and the trend line from our 2023 low, we're getting a 9-count sell signal on the S&P as well. This trend line right here, we went right up and slammed right up into it and overthrew it and hit that upper boundary from the 2018 trend line. And as we went up and hit that trend line, the trend line from 2018, we closed just right at it there, and we went up and we hit the trend line right here, and we turned off of it, the trend line from the 2023 low, and then the upper boundary, the 2018 trend line. Now we're getting the 9-9 signal. We're getting a 9-9 reversal pattern setting up. Good chance that we're going to see the 9 count be the reversal bar because we're slamming into major resistance with the 2023 trend line, the 2018 upper boundary of the channel. So again, we'll be watching that. But you did complete a 9-9, which is a reversal. This 9 had no sell off associated with, no correction, reversal. We got an immediate trend extension. Now you get the reversal pattern. The 9 count that marked the bottom over here, bar 8 being the low of the count. So again, you got it on the NASDAQ, you got it on the S&P. Last weekend, I told you that the 9 count might end up being the high of the count for the S&P 500 because the Dow and the Russell, the 8 bars, might try to go and make new highs. And if we start selling off, the Dow still have a perfected signal, even if the 8 bar is the high of the count, even if the 9 bar is not the high of the count. At the bottom, the 8 bar here was the low of the count, and we got a big rally back up with that 8 bar, and then the 9 bar we pulled back, but it was still a higher low, and it was still below the bar from 4 bars ago. If the bar next week is still above the bar from 4 bars ago, 1, 2, 3, 4. So if we're still above this bar right here, then this count could complete. If we take it out by next week and we close below that, then you just get up to bar 8 and that's the end of it. Count doesn't finish. It's incomplete. Something to be paying attention to. 9 counts on the NASDAQ and S&P and 8 of a 9 on the Dow. That was a weekly on the Dow. This is a weekly on the Russell. The Russell, we moved to a new intra-week high this week. So again, the 8 bar is the high of the count. Had a 9 count bottom over here, a 13 count high over here. The Russell would have to be above bar 5. 1, 2, 3, 4 has to be above the doji there. So again, you start turning down with the Russell, it could end up canceling out the count. You got to be above the bar in the weekly time frame from 4 weeks ago. If you get it, if you see the Dow and the Russell be able to complete the 9 count, start seeing the S&P and NASDAQ sell off, does it mask a sell-off possibly? Or do these counts just not complete? Should the 9 counts produce a reversal on the S&P and NASDAQ at those key resistance levels? You're slamming into major resistance with both the S&P and the NASDAQ. So 8 of 9 counts on the Russell here in the weekly time frame and on the Dow. We'll be watching those as well. Don't forget, I mentioned earlier in the week, Apple's getting that 9 count as well. We got a 13 back here at the top on the 2024 high. We'll be watching this 9 count here on Apple's weekly chart. 9 count on Apple's weekly chart, you get a 9 count on the S&P, you get a 9 count on the NASDAQ. All this happening as Nvidia is slamming up into major resistance, NASDAQ's hitting that upper boundary, the broadening wedge, broadening formation, and S&P hitting the 2018 trend line and the trend line from the 2023 low. Major resistance with these 9 counts forming. Apple weekly chart here.